You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
All right, everybody, that music means we're back doing something a little bit different on the network, rolling out the old interview chair once again. I know what you're thinking, man, didn't you get enough interviews down there at the OIC conference recently? Nope. We're bringing more to you out there, listeners, whenever possible. And joining us today on the old Options Insider Radio interview program is a newcomer to the program and indeed to the network. He is James Kostulias, the head of trading services over there at Charles Schwab. James, welcome to the Options Insider Radio Network.
Hey, Mark. Thanks so much for having me. Great to be here.
Yeah, I'm trying to remember. It's been a while since we've had Schwab on the network. You know, we used to check in with you guys fairly regularly. We launched a show with you guys way back in the OX days, the pre-Schwab days. Grigas was still there, John Grigas, Tim Navabi, Alex Jacobson was still there. So we had a good cohort of OX/Schwab people on the network on a regular basis. So it's good to check back in again, James.
Great to check in with you as well. Grigas is still around, running a key part of our trade desk. Great guy and a fantastic resource in the trading and options space.
I feel sorry for you working with that fellow, I should say, every day. Just a horrible human being. All right, James, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the option space, as well as what it is you do day to day over there at Schwab.
Awesome. Happy to do it. So, been an online brokerage guy my whole career. Started back in 1998 with Daytech Online, and we rolled options out in 99. And I had a part of that project as well, educating the field. So educating all of our brokers on what it would mean to trade options at Daytech. And so from there, it was a series of mergers, Mark. Ameritrade bought Daytech after the after the dot-com crash back in 2002. I spent some time there. Been at Ameritrade really the whole time. We did the Thinkorswim acquisition, the TD Waterhouse acquisition, the Scottrade acquisition, and then ultimately acquired by Charles Schwab here a couple years ago. And now today I have the pleasure of leading full-on trading services at Schwab. So what does that mean? It means our platforms, so our trading platforms, the Thinkorswim suite, our education business, which I know we'll talk a lot about today because education is so near and dear to your heart and your listeners' hearts. And then thinking about sort of the service we provide, where we mentioned Mr. Grigas and a team of super experienced professionals running our trade desks. And then you've got the products associated with trading. So the product management of options and futures and Forex and equities trading, ETFs, et cetera, et cetera.
Wow, Daytech. That's a name I haven't heard in quite some time. So you're digging deep into the past there. I like that one. Well, speaking of the past and perhaps the future now, let's get into it a little bit. You obviously pretty much finalized your integration now of all the platforms. You mentioned the various acquisitions that have gone on over time. Of course, Schwab very famously acquired or announced they were acquiring TD back in November of 2019. I believe the deal finally closed about a year later, and here we are 2024, end of July 2024, and we're finally talking about the final I's being dotted and T's being crossed on the integration. So I know for a lot of our listeners, they're probably asking, what took so long? So I will put it to you, sir. What took so long to bring all these platforms together?
Yeah, it's a great question. And I'll tell you, we really tried to make sure we were doing it right. And right doesn't mean perfect. I know for a lot of the Ameritrade clients, they didn't ask to move, right? They were very happy with the Ameritrade experience and the Ameritrade value proposition. But you could do a clearing conversion in probably about half the time we took, but we spent well over $1 billion on infrastructure coming out of the pandemic and the meme stock craze, where obviously, as you know, volumes were so extraordinarily high. We spent time closing gaps on the platforms. We spent time bringing the thinkorswim ecosystem over, so the download, the desktop download, the web application, and the mobile application, and to do that, the required sort of plumbing, maybe is a way I would say, in terms of your order management system, your market data plan, et cetera, et cetera. And we wanted to do all that stuff right to make the transition as seamless as possible for clients. And so a lot of the time over the course of those 4 years, Mark, we really spent on the experiences around the integration to ensure it was as smooth as possible. And again, we know it wasn't perfect. We know for some clients, they didn't ask for the change, and change is a bit hard, but certainly in our core trading system, that's most probably important to your listeners. The thinkorswim system came over lock, stock, and barrel, and is operating and performing essentially exactly as it did over at Ameritrade.
Well, you mentioned the platform thinkorswim. That was one, obviously. I know at one time after the deal was announced, Schwab actually had 4 options platforms up and running at the same time. There was, of course, Options Express and the Schwab actual options platform. Then, of course, there was the TD primary options trading platform. And then there was thinkorswim. So fast forward all these years later, would you say that the TOS platform, thinkorswim, that is the primary options platform, the primary options offering from Schwab going forward? Or are there still some people maybe using the old legacy TD platform?
Yeah, so another really good question. Yeah, no more on the legacy TD platform. So we have sunset those. thinkorswim is absolutely the main options trading platform and trading platform overall. It's the only place you can trade futures and Forex. It does the bulk of our equity and the vast majority of our options trading. You can trade options on Schwab.com and the Schwab mobile app, and we do have clients who are very happy with those experiences. And then you brought up Option Express before. We're in the process of sunsetting the Street Smart applications, which were the legacy Options Express applications. And again, we know that's not easy either. We have a lot of Schwab clients who love those platforms, and we're spending a lot of time with them, with our service desk, live and in person, via virtual sessions, through live education events to help them get acclimated to the thinkorswim suite. We're working to fully sunset the Street Smart platforms here by the end of this year, at which point in time you'll have Schwab.com, Schwab Mobile, and the thinkorswim suite as the platforms for clients to trade equities and options.
It's kind of sad. I liked the old OX platform. I was a fan of what those guys were doing. I get it. Everything has to evolve and change with the times. One of the elements of the OX platform that they were very proud of, in fact, when Alex Jacobson used to be on the show, that was kind of his baby, week after week talking about it, was the Idea Hub. They really put a lot of effort into the idea generation side of the space. I know that you're sunsetting those platforms. Have you kept any of those elements and maybe migrated them over to the TOS platform?
Yes, that's exactly right. We are creating what we've got a Street Smart view within thinkorswim. We look at things like the screening processes, scanning, back testing. A lot of that was already there within thinkorswim, but there have been a few core features that we have taken from Option Express, but from Street Smart Edge, and we've got a few more that we're also working on that are coming. So things like walk limit orders, as an example, and just some of the overall UI of Option Express, of Street Smart, to help those clients really acclimate into the thinkorswim world. It's tough, right? You know this. Your listeners know this. When you spend all market day on a trading platform, you get incredibly used to it, incredibly comfortable, and we know we're asking clients to transition, and so we want to give them as much time as possible and as many resources as possible. and close as many gaps as possible to make that experience the best it could possibly be.
Since we're talking about the tools and the platform, I always love when I talk to the folks on the brokers, because we all know about the main offerings and the tools and the scanners we all use day to day on our favorite platforms. But you guys who run the platforms, you always have maybe a secret favorite. Maybe there's a hidden tool or hidden bit of functionality on the platform that people don't really know about that you like to use. I think more people should be using it. So obviously you have a broad array of tools over there on the TOS platform and on the Schwab platform right now. If you had to say that maybe you had one favorite, or maybe there's one little bit of functionality that more people you think should be using, what would you say it is, James?
And I have 3 kids, Mark, and you know how hard it is to ask them to choose.
You can only choose one child, James.
It is tough. I actually think I would lean into the education. And what I would say is a lot of clients don't realize that through the actual desktop platform, you can link into the entire education suite that is available within thinkorswim. And that includes a few things. That includes the Schwab network, which not everybody knows about, which is our own network of live programming. We start at 8 a.m. every day and with the Future Show. And then we've got a ton of great content all throughout the trading day. We've got shows focused on, clients who are placing their first trade. We've got shows focused on, technical analysis, the options market. I think the network is one of those hidden gems out there that not everybody knows, and you can fire that right up within the platform, or you can actually watch the network on its own if you just want to go to schwabnetwork.com and not use the platform. But then also through thinkorswim, you can link into the educational archives, which are a library of webinars, computer-based training, courses. When I think about what you all do here at Option Insider with things like Options Bootcamp and Option Playbook, think about our versions of those, which are both sort of product-centric in the world of options. And so I think we're going to talk zero DTE here at some point, because it's such a hot topic, where we've got sort of specific content designed around the risks and the opportunities of sort of trading those instruments, all the way from technical analysis to, basics of how to ultimately use the platform. So I'm going to give you education as my secret weapon, Mark.
A very political answer of you, sir. But zero DTE, I'm not familiar with that term. What are you talking about? Zero DTE, I have no idea what you're going on about.
You've never heard of it, right?
Never.
I think we're supposed to call them short-dated options based on the your last webcast that you did that I listened to. I think you told me that's what's politically correct these days. Short-dated options, is that what we're calling them?
Now, that's what the exchange folks like to argue. They get mad at me whenever I say zero DT. I tell them it's too late. That genie is out of the bottle. It's 0 day. Just embrace it. They always come back to me and say they're not exactly listed the same day. So I get their argument, but it's a semantic argument at the end of the day. The folks are calling them 0 day. It has been embraced. Just go with it. Just run with it at the end of the day. So let's talk a little 0 day. We haven't really checked in with you guys since the onset of this massive zero DTE explosion. We're a little over 2 years now, about 2 years and 3 months or so into the modern zero DTE era, when everything really kicked off in earnest. It's funny when I come back from a big show like OIC, or even when I talk to our audience, and our audience are very much on the bleeding edge of the options market. Even still, to a lot of that audience, the notion of 0 day and trading everything that lives and dies all in one day is still contentious for them. They're still split roughly 50-50 on whether they like these things, these are the best things in slight spread, or these are going to destroy the options market as we know it. So let's start there, James. Where do you fall on the whole zero DTE debate? Are you yay or nay? Do you think these products are really offering something new, bringing something new to the table, or are they just adding a ton more risk to the market, sir?
What a big spread you give me there between sort of ending option trading as we know it to the best things since sliced bread. I think I'd say a couple of things.
There's no room for subtlety here, sir.
I love that, Mark. I do like it. Not inherently good nor evil is sort of where I would start. I think they certainly get their fair share of vilification. And I think, like all options, an understanding of the risks associated with them is paramount to success. And so I think people jump at the, the fact that so many expire out of the money, and the fact that, whatever percentage you want to use, 80+%. I think that's a bit short-sighted when you look at the way a lot of our clients are using them. No doubt we have clients trading them speculatively for sure. But when you think of some of the broader hedging strategies people are putting on with their sort of holistic portfolios, I think that's a really important piece of this. And I think people jump to the speculative traders who, want to go in and sort of speculative trade every day. But, if you've got a specific portfolio at a specific time, I mean, today was probably a great example where you had, Fed news coming out and you wanted to use, zero dated options or short dated options on the S&P today. There's a lot of use cases where that makes a heck of a lot of sense. And so from my perspective, I think when used right, they are a very good tool. But like all options, we work really hard to make sure clients understand the specific risks associated with those, right? And so, back to sort of where we started, good or evil, and people want to throw out, hey, these are gamma bombs and they're so dangerous and this and that. I point out, weeklies have been around for a really long time. I think you could check my math because you know better than me. But I think the CBOE piloted them around 05-ish, I would say. And I don't remember sort of the vehement fervor that we see now. And the reality is it took a monthly expiration process and moved it to weekly, and obviously on single name securities. And we all got comfortable with that. The reality is there's options expirations happening all the time. Zero EDTEs on the specific ETFs or indices just mean for them they're happening a bit more frequently. And so I just think people need to think about that holistically when they sort of cash dispersions or ultimately make judgment on the product.
You mentioned the use case for your customers. Let's get to that a little bit because there's a variety of different use cases for zero day. What would you say is the prominent use case that you're seeing over there at Schwab right now? Is it, you mentioned the Fed, is it hedging and speculating around very specific events like an earnings or a Fed announcement? Is it kind of just day-to-day grinding and selling premium maybe through spreads or something else? What would you say is the primary use case you're seeing right now for zero-day options?
Yeah, I mean, being where we sit at, and when we report obviously our public numbers of 6 to 6.5 million trades a day, call it sort of 20+% of those being derivatives trades, depending somewhere in lower 20s, sometimes up as high as maybe the 25. So I think 20 to 25% of derivative trades, you're going to see clients all over the map there. And I think you do have, clients placing those speculative trades, as you call it, grinding. You do have clients that will obviously sell premiums and can now do so sort of on a daily basis. I think one of the things I would point out coming out of sort of the meme stock craze, our new account numbers grew so rapidly during that. But one of the things that makes me really happy with the job I have and the place that I sit, we kept a lot of those clients, and we've watched those clients grow and mature from how they started trading, during the meme stock era through to what they do now. And I think what I would part would be, it is all over the map, but you do have a lot of sophisticated retail clients. That sort of notion that retail money is dumb money, I think is really, hopefully, going away when we look at the retail traders who are doing a lot of things other than just speculative trading. But it really is all over the map, Mark.
You mentioned the volume numbers and how you kept a lot of that business post meme stock. The volume in general has been a frequent discussion point ever since the pandemic. We obviously saw just a massive uptick in options trading. People like myself, I freely put myself in that category. I thought it was a phase. I thought everyone was home for a little bit, and trading became the new sport because there were no sports on TV. And once everyone went back to work and life resumed some semblance of normalcy, that would all go back to the more normal, maybe slightly elevated, but closer to normal volume levels we all had come to expect from the world of options. And then, of course, fast forward into 2021 and 2022. And I was proven wrong, and I was very happy to be proven wrong out there as more people continue to discover the options market, and volume continued to grow month after month, hit 10+ billion contracts, another pretty much record years every year since the pandemic. And pretty much every month, year over year, has been up. This year is the first year where we're starting to see perhaps a few chinks in the armor. You first noticed it back in March when there was a down month year over year. Of course, comparing March 2023 and 2024, a bit different because 2023, of course, we had the contagion fears that maybe artificially inflated volume a little bit. But then we saw it again last month with June coming in down almost 5% in terms of total options volume over there. Obviously, we're one day away from seeing the July numbers. I suspect July will deliver, but we shall see. I'm curious from your perspective, James, and what you're seeing on your platform. Is that options volume, is it still strong? Are you still seeing new people coming in and embracing this market, or has it maybe started to plateau a little bit?
Yeah, we're absolutely, options volumes are very strong, and to your point, continue to grow. I think, some of the volatility in the growth that we had seen at different points, will ebb and flow for sure. I think we have seen over recent months sort of more of a pickup in equity trading than maybe a decline in option trading is sort of a fair way to say it. And I think some of that driven by what we saw in the Mag 7 and just such a concentration of money into those specific equity names. I think the other thing I would say, back to sort of the zero DTE front, the other real variable is volatility, right? And so in a place where the VIX was sort of settled around 14 for quite some time, we've got a little bit of a pop here the last few days here, which I think will feed into your hypothesis about what we may see in the July numbers. But I think that's also a big push for people into the world of zero DTE, especially for those who are selling premium and looking to capitalize on the volatility based on the time value of the options. And so for me, I actually think it's great. I think if you were to continue to see sort of that exponential pace of growth, at some point that burns out and that becomes not sustainable. I think what we're seeing is the options marketplace is such an important component of the markets, and one that as people better understand and are better educated through companies like yours and programs like yours and the work that we try to do and our competitors try to do as well along the lines of education, I think you're going to continue to see steady growth there because of all the applications of it, right? Those who want to trade speculatively and gain the leverage, there's a use case for that. Those who want to hedge or protect, there's a use case for that. Those who want to generate income, there's a use case for that. And I think one of the things we're maybe starting to see, it may be too early to call, but a whole new paradigm for option traders in a world of non-zero rates with some market volatility, right? We had market volatility, but we were at near zero rates for, since 2009. Now we have interest rates, and if volatility starts to come back in, what's that going to mean for option traders? But I think it's going to open up a whole new sort of set of use cases, if you will, for the public. So I'm really excited about where we are. I'm really excited about the growth that we're going to continue to see. And I actually think it's great that it's not that, exponential explosive growth that at some point seemingly always has to just fizzle out.
So you think this little bit of fluctuation we've seen right now, you think that makes it more sustainable over the long term?
I do. I really do. And I think that's one of the things, again, that we've seen with traders, especially traders who sort of came in during the pandemic and their understanding of how to adapt to different market conditions. And I think that's where it is so important to, be current on the news, be current on trends, be current on the current macroeconomic indicators and things like that, certain things matter a heck of a lot more in one environment than they do in another environment. And as we know, as we see different behaviors in equities, as an example, you're going to see even different set of behaviors in options on the underlying based on their characteristics. So I think this is part of the thing that keeps traders excited. I think traders are very interested in learning and evolving and trying to, take advantage of current market conditions. And I think, anytime you get a new set of market conditions, it opens up opportunities.
Well, one of those opportunities comes in the after hours space. Coming out of the options industry conference this year, one of the big topics that everyone was really fixated on, in addition to zero DTE and all that fun, was the notion of expanding the options, pun intended, for options traders out there. And a lot of people are looking at the underlying market and thinking maybe it's time for stocks to go 24/7. That would obviously have an impact on the options market as well. Let's start with the underlying. James, I'm curious, you folks over there at Schwab, where do you fall on that debate, yay or nay? Do you think stocks should go 24/7, or do you think maybe the respite is good? Do you think people need a little bit of that rest and recharge moment before the next opening bell, James?
I do. I personally think there are a lot of unintended consequences when you think about the 24/7 trading environment. And so there's no doubt in my mind that people want to broaden the market hours a bit. And so we are in the what we call 24/5 game for a set of very liquid ETFs, roughly 24, 25 ETFs we offer in what we call that 24/5 market. I think as we look at some of the bigger single listed names, very liquid single listed names, the idea of being able to trade them outside of sort of your traditional market hours. And when I say traditional market hours, I'm not just talking about exchange market hours. We do what we call an 8 to 8 trading window where you can trade a whole heck of a lot. And then after that, we hit that what we call 24/5 window of the limited ETFs. And so I do think there are use cases for single stocks within that window. Once you start to talk about the weekends, and then you start to talk about the settlement implications, and then you start to talk about events, macro geopolitical type of events that could happen in that time frame, and what it may mean to liquidity and everything else, I think there's a lot of questions to ask. So I'm bullish on broader trading windows. I'm a bit bearish though on the whole idea of 24/7.
It's funny. It seems like we have two very disparate camps pulling the options market in very different directions. The one you kind of just laid out that wants everything to go 24/5 or perhaps even 24/7 down the road. I think everything should be trading all the time, just like the crypto markets or maybe some of the futures markets people are used to out there. And then there's the other side, and we just talked about zero day. One of the big drivers of zero day volume, I don't care if you're retail or a seasoned professional, whenever I talk to people who are really, really drinking the Kool-Aid on zero day, and when I ask them, why do you love these so much? The answer I invariably get is that they end. They end at the end of the day, so they don't have overnight risk. They don't have weekend risk. So it seems like we have two very different contingents going forth in the option space right now, James. The ones who love zero day precisely because they are so finite, and then the people who want it all day, all the time.
Yeah, I think that's a very perceptive statement. And I think, you go back to, the early days of, day traders and as that was all sort of heating up back in the 90s, that concept of the electronic day trader. And to your point, the tenet back then was, go into the night flat, right? Because you can't control the overnight risks associated with that. And I think there are a lot of people that believe in that. I think at the same time, as we talked about some of the hedging strategies people use, obviously you have the futures markets, and we're a big player in the futures markets, and the futures business is a very important business to Schwab. And we think, again, back to the both for speculative trading that clients may want to do as well as hedging, futures is a great place to do that. And so I think you need, and obviously a very liquid place to do that. And so I think you need to think through some of those unintended consequences for sure. And especially when you think back to sort of the pandemic and some of the things that were, that we saw, first time things that we saw that had incredibly intense implications to the market. You think about some of those things going on and sort of starting over a weekend, if you were in the 24/7 trading game, what that might look like over the weekend, what those volumes might do as you get into the Monday Open. And I think those are things that everybody needs to think through and make sure we understand the ramifications, because at the end of the day, we want to provide products that make sense for our clients, our investors, our traders, but we got to think through all of those unintended consequences associated with those. So get to a world where you're 24/7, zero DTEs listed on, single name equities. And, we're in a place where options on the Bitcoin ETFs exist. Cryptos obviously does trade 24/7. There's a lot there for people to digest, Mark.
Yeah. You laid out an interesting world, 24/7, zero DTE trading all the time. You're getting pinged on your 0-day alerts at 3 a.m. It sounds like a wonderful world, James. I can't wait to live in it. But, you mentioned some of the hidden implications of that. Obviously, if, let's say, for sake of argument, the stock market decides to go 24/5 now, obviously that's going to have implications for the options market as well. I've heard a lot of different proposals as to what shape the options market should take in that environment. Should it just follow and make it be a 24/5 free-for-all and everything's trading all the time? Should it be limited to some of the more high volume, more liquid names, maybe a pilot, and then kind of grow from there? What format do you think it should take for the options market if the equity markets decide to expand to, let's say, 24/5?
Yeah, I'm generally a big crawl, walk, run guy, where I think we can crawl and we can understand the implications there, move a little bit quicker, and then ultimately get to the run phase. I think, working through just things like the expiration cycle, and I think you start to ask other questions, right, on those if you go down that road of sort of, short-gated, single-listed options, and do those need to be cash settled to make it an efficient expiration process, maybe take some of the risk off the table and maybe make the process a bit easier for the broader ecosystem, whether that be the brokers, whether that be, the exchanges, whether that be DTCC, et cetera, et cetera. And so I think there are a bunch of questions you could ask there and enough questions that would make it smart to say, why don't we pilot something on a smaller scale and get a feel for both the benefits and the unintended repercussions of doing this so that we can adjust before we go bigger. To me, that seems like a very, very logical step to take.
You mentioned the whole cash settled argument. That is another debate that is raging right now. In order to expand 0-day, everyone loves 0-day, or at least I should say half of the audience loves 0-day. The other half, I think, to put it mildly, lukewarm. But people want more. They want more than just, your S&P and your NASDAQs. They want some of the hot single names that they're trading all the time. The Teslas, the Nvidias, the Apples of the world, all that fun. I've heard a lot of interesting discussion behind the scenes about just how gummed up the works are for listing single name Teslas and Nvidias. I've heard, like you mentioned, maybe we need to go cash settled first and create a whole new universe of cash settled equity options, and then those can have 0-day, or maybe we need to get rid of contra exercise, which the market makers don't want. So it does seem like it's at a bit of a loggerheads behind the scenes. What are you hearing behind the scenes, James? And which way do you think we need to take in order to get the 0-day Nvidia that everyone wants, James?
Well, I think the other big thing, it's not just sort of the broader ecosystem for how we handle it, but I think the other thing to really think about is the risk, the event risk associated with a single listed 0-day option, right? And so you could argue, hey, you have that risk now, right? And you use Tesla as an example, so use it. It's obviously one of the hottest names out there, and has been for a while. And you've got Elon out there who is in the news sort of quite often, right? And so now, when you're in a monthly cycle, the risk of something in an event, a news event happening the day of expiration is obviously sort of 1 in 30, 1 in 31. If you go to weekly, 4 out of 5 out of 30. But then if you go to daily, it's sort of every day, which means it's going to happen, and it could happen sort of multiple times in a week. And I think the volatility associated with that and the implications of that are definitely something I'm not sure for your professional trader, may be a great product. I think for your individual investor, it's definitely something we need to absolutely think through the implications are. I think with some of these, Mark, it's interesting. I've been following along in terms of your audience. It's interesting to hear they're sort of split there, and I think they're also split on the 24/7 question, or actually maybe even a little bearish on the 24/7 trading windows. I think there's a lot to that people need to think through. And this might be one of those cases where, be careful what you ask for, you just might get it. That's at least what I'm thinking, in addition to the broader set of questions of just sort of how the broader ecosystem were to handle this. You think of sort of the time of expiration of one of these versus the time of the issuance of the next one. And, is there any overlap? Is there no overlap at all? Just one expire at the exact same time another one starts trading. I think there's a lot of infrastructure questions that we really need to sit down and make sure they hash out. And I know right now people are sort of on both sides, and I'm not sure where people are in terms of sitting at the table and saying, okay, logistics and all the mechanics. Right now, there seems to be a lot of more of discussion of, should we, shouldn't we, what are the benefits, as opposed to the actual guts and logistics of how you would handle something like this.
The devil, as they say, is in the details. Unfortunately, that music means we are running out of time, James. A fascinating conversation. I appreciate you taking some time out of your day to give our listeners a bit of an update of everything that's unfolding over there at Schwab. But before we go, we like to leave our audience wanting more. So, James, as you look ahead to the rest of the year over there at Schwab, if you'd like to leave our audience with a hint, a tease of what they can look forward to coming down the pike from you and the rest of the options team over there at Schwab, now is the time, sir. The floor is yours.
We are really excited to be through this integration and focusing on platform and product innovation for our clients. We've got some really cool features and functions we're working on in the Thinkorswim platform relative to overall portfolio views and overall portfolio risk views in Thinkorswim. So stay tuned. We're super excited.
There you go, listeners. And you know where to go to find Charles Schwab. You don't need me to tell you. Charles Schwab, the place to go to kick the tires and light the fires. The TOS platform, now the main options vector for all of you out there. So intriguing stuff. It is possible you are one of the many users who aren't using Schwab, then by all means, kick the tires and light the fires and see, maybe they have something that intrigues you over there. That is going to do it for us on the network today. A busy day just came off, an options bootcamp doubleheader right on into the interviews. Back again tomorrow with our usual Thursday doubleheader, kicking off the day with our friends over there at SIBO and the Flowmaster, talking all things unusual activity on the option block. Back again with our friends at CME to talk all things futures options on This Week in Futures Options. Friday, of course, back again for some vol viewing with Volatility Views at noon Central, followed afterwards exclusively for our pro folks with a little bit of unusual activity to wind down your week with options oddities. Then we're back again next week with our usual array of content until the next time we roll out the old interview hot seat. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.